Good afternoon. This is Mac with PriceActionTradingSystem.com, and today is Thursday, May the 10th. This will serve as our chart lesson for today. This is going to be a quick one today. My son's got a spring football game. They're having their spring game today at 4 o'clock, and so I'm going to try to be out of here a little bit early to catch his ball game, and so I'm going to kind of breeze through this one today. We really had a downtrend. You can see the down sloping channel right here, and we broke it and we came back and retested the low, and now we appear to be heading higher, and that's what I'm assuming is probably going to happen right here. But we spent most of the day in this range, which was about a 54 to 61 area, so about 6 or 7 point range. But hopefully you found this channel if you just drew your trend line off these first two. And early we were in a trading range here, and we had this little trend coming up. We had a break, then we went up, made a new high, and then we just kind of went in this trading range. And you probably should have had this line right here. Even if you didn't find the trend lines, you should have had a line like right across. There were your last closes right there, so that's probably where I would have had it. You can see that contains most of the price action. So anything outside of that was really just noise or failed break. And so that's what we start out. Let me back out. We'll go over each of the trades. And like I said, I'm going to try to keep this under 10 minutes today. I always say that and never do it, but I'm going to try my best. Somebody else actually asked me about this trade here, and I was impressed. Not the same person yesterday. It's 2 days in a row that I've gotten a question I've been real impressed with. Yesterday was one gentleman, and the other one was a lady today that asked me about a setup here, and I was really impressed that she saw this. But we had the trend line. You had this upsloping trend line right here, and you could say, well, why didn't you start it over here? But this is really a trading range, and the trend didn't start to right here. So that's kind of where the trend started, and you can see that trend line was good. We had the break. We had a run to a new high, made a new high, and then the prices never could go higher after that. We kind of went into a trading range. It took a little while, but right after the open, the downtrend kind of started there because the prices opened. They actually opened right over in here, but we tested the low, then the high, and then we went into the sell-off here. And hopefully you drew your trend line off those first couple of swings, because if you did, you found all these other these two great setups much easier. And but let me explain this one. We had the trend line break, moved to a new high, and this is just a two-legged correction. And anytime you get two legs, and if you measure them, they're really close to being, if they're not a perfect measured move, it's real close. There's leg one, and then there's leg two, and you can see that. Really, you could call that leg two. But either way, it's as far as the closes go, it's a perfect. If you use the actual closes, it's a perfect move really from the high to the low close. So that's a two-legged correction, and then look in the middle. There's a two-legged move in the middle, and that tells you that this is probably leg one of another move. And then also, even if you didn't see that, this is a double bottom, and it's really a second entry long. You got your first move up, a pullback, and then again. And if you went to a smaller chart, you'd clearly see a nice second entry long right there. So you got a bigger picture second entry long, you got a smaller picture second entry long. Lots of reasons to be thinking long right there, and that was a great trade. And these are the kind I'll buy. These are the type I'll buy blindly a lot of times. Just have an order sitting here because I know I got this support down here already, and then I got a two-legged move that's a measured move right here in the same place. So that's what I call confluence, multiple reasons to enter there. Great setup. So the lady that saw that, very good job. I'm proud of you. But then there was actually a setup right here that you could have taken. I didn't mark it because it wasn't clear yet if we weren't going to try to make another bigger two-legged pattern higher here, which it never set up. And by the time you got this second entry right here, then you got you actually got 1, 2, 3, 4, 5, 6 bars overlapping. That's a doji, that's a doji, that's close enough to be a doji. No, it's kind of dangerous entering right there. This was kind of no man's land. It wasn't clear if we were going to try to go higher or try to go lower, and they even tried to go higher one more time right here, But this wasn't a good long setup either, because we had this little trend line right here and there wasn't enough room really. But when this thing pulled back up here and failed, and this turned and closed very bearish like that, going short right there was a great setup. Easy scalp. Depending on how you played it, you probably didn't get any runners out of that, but that was an easy scalp. And this is just a breakout pullback short right here, because then you had this minor trend line coming down right here, and you see we came back and tested that again. So when prices turned back down, you could have gone short right here. I did not mark it because this could have been the bottom right here. So it was a little risky, but if you took that, that was a great trade. And it was a little risky, but that's what comes with risk sometimes. If you take the riskier trades, you just got to be quick to cut them short if you're wrong. But when you get it right, that's an easy move. It's good for several points right there. And then we came back and tested the trend line again right here, and I was thinking short right here, but it never set up. So you got a chance to go short, and this is one of those cases where this is a little inside doji. This is a breakout pullback short, but look at the two legs right there. So this setup is very similar to what we had over here. Because you got the two legs, it makes it really, you can expect that's probably it. But there's leg one, then we pulled back right there, and look, there's leg two, and it's almost a perfect measured move, depending on how you measured that. If you measured it from here to here, it probably is a perfect measured move. But if you went to a smaller chart, you would easily see two legs right there. So going short right here, even right here, was probably okay. It was, if I wasn't short by the time this bar, I was getting a little worried going short right here. And when this ticked one tick lower and turned up, I thought I was going to be trapped and that we were going to go to this other side right here. But I wasn't sure if this was the lower part of the channel yet, or if this was it. So it wasn't real clear yet. I believe that it did turn out to be this low right here, and you can see that pretty much held prices. But this is a two-legged pullback to the EMA in a downtrending market. So they almost always are good for a scalp, and this was another several point move here that you would have made. And then somebody asked me about going short right here. Hopefully looking at my chart, you can see why there's no way you would ever go short right there. That's mistake number one, and I'm not picking on you. Don't take that the wrong way. I just want you to understand that is a huge mistake, going short. Two of our main rules is we don't go short on a breakout, which I'm not sure where you got short. Maybe you got short off this bar right here. But look at all those overlapping bars. That's just congestion. So you're getting short at a strong support area, and if you had these trend lines in place, you could probably see that by the time you had these two swings, you definitely should have had this in place. And you can see that's an easy, that's a low, and we've had a pretty good move down, and you're getting short way away from the EMA here. It's not real far, but it's far enough to know that's not a good entry. But the key here, even if you didn't have any of these trend lines or anything else, look at all those overlapping bars. Remember, we don't go short out of congestion. The only way to go short here is on a breakout pullback short, and there's not one. Prices never even closed outside that line. Look at that. And that's where most of your touches or your closes are at right there. Even if you had your line right there, there was no close outside that line yet, so that's strong support right there. And no reason to be going short. The only way you could go short here was that prices broke lower, came back and tested that line, and then went lower. That's a breakout pullback. And if you had that, then maybe you go short. But if you were drawing your trend lines and cloning them and bringing them down, you would know that's not a very good place to be going short. And the simple fact that, if you use the rule, 3 or more overlapping bars and at least one of them's a doji, knowing that's congestion, that's enough reason not to go. But this is a great short. First thing I'm thinking is it's time to get short, because prices are stuck right here and can't go any lower, and you can tell somebody's really protecting that level right there. All the buyers are coming in, so that's a great place to go long. And you can see how prices rocketed up. This was a nice 4-point move or so off your runner, so that was a great move. And then you had another short coming right back, and this is a two-legged move here again. There's leg one. There's your little correction in the middle, and there's leg two. And so this is a second entry short right here on a smaller level. And boy, this was a nice move down here. So again, you had the same thing you made on the way up. Now you make it on the way back down. There's another 4 points or so right there. And then you got another bounce down here in the same identical place. So once again, just another long right here. And the fact that this came up short of this right here and this held, I was thinking trading range at that point. And you actually would have probably had this drawn down here by now. You would have moved it down, but you would have moved it back up later where I had it. But you can see that right there, that this, this is a trading range. But that was the last high right there that we tested, and then we broke above right here. And so there's your failed break higher, a chance to go short, and there you go. There's another nice move all the way back down. And the reason you wouldn't really like this one right here, look, there's 1, 2, 3 dojis in a row with prices not breaking that. So that's dangerous. Prices are probably going to break out of there and pull back. And look, lo and behold, that's exactly what happened. And you don't want to be going long here, because then you're doing just like you did down here. You're getting long at a strong resistance right across here where prices have held multiple times. And you don't want to be doing that. And so this is a short right here. And look what happened the next time we came down here. We finally broke out, and now look where prices are. That's why you don't break. This is a perfect example, both of these. This is why you don't trade breakouts unless it's a breakout pullback short. If this was going to be a good short, prices would have come back and tested this line right here, or wherever your line was, and turned back down. But it didn't even hesitate till it got to the EMA, and that's well above this line. So that's not a good breakout. The only place, if we'd have broke below this nice bearish bar right here, that might have been a better setup, and you might have taken it. But look, it never triggered. So, and that's why you don't want to be going short. But you can see there's only one leg up right there, and so we're looking for 2 legs. And let's measure this leg right here. There's leg 1, and I bet you leg 2, look at there, it's going to be just about the same, and then prices are probably going to pull back some. It's 5 minutes for the close, so something crazy could happen. This thing could run all the way to the top. But you see it's starting to struggle right there, and guess where that 2-legged move points to? These highs right there. So you're going to expect to see resistance right there. So be thinking ahead and planning ahead. And but anybody that was thinking about getting short right along here is thinking wrong, and anybody thinking about getting long right across here is wrong. And you can see what happened before. You would have originally had your line here after these 2 formed, and look what happened when prices broke out. They came back again and got all hung up and got people trapped on the wrong side again probably. Then they made it think it was going to go higher, and all they did was trap some more people, because by that time now your line's probably up, like right here, and or maybe back up here where this high is, because that's what we were really fighting against, was that resistance area right there. And you can see that turned out to be it. When we broke above that, all they did was trap people. But I'm going to wrap it up. It's 13 minutes now, and I told you I want to get out of here early today. My son has a ball game, so hopefully all that makes sense to you. But this is the stuff you got to be looking for, and hopefully that answers some questions for a lot of you about going short. Don't go short at strong support, and that's what most people do. They get short at the lows, and they get long at the highs. And I see it more and more times than you can shake a stick at it. People are getting short all across here, and they're getting long all across here, and they need to be thinking just the opposite. Be thinking the opposite, because that's probably what's going to happen. So, but I want to wrap it up. This is Mac with PriceActionTradingSystem.com. Hope you had a good trading day. I'll see you tomorrow. Tomorrow's Friday, so we all need to close on a good day tomorrow, and make it a good week this week. And I hope everybody is learning. And if you're not making money yet, you should be sim trading. And if you have not been making money consistently for at least several months, you still should be sim trading. So nobody should be trading live unless you've proven with time that you can do this. So that's one of my recommendations and rules. But I'm going to wrap it up. This is Mac with PriceActionTradingSystem.com, and we'll see you tomorrow.